How are you?
Good morning, Dave. Hey, I'm doing well today. How about you?
Not bad at all. We're going through a different system, and as I brought you up, I had a little recording saying this meeting is being recorded. No kidding. I'm doing it here too. It's good to hear your voice. Boy, 3 in a row. Is there any possibility of having 4 up days in a row on Wall Street today?
It's looking like we could be there, but you and I both know that it's going to really depend upon a couple things today.
U-turns do happen in a hurry in the market the way they are. A couple of those things that could affect it today include the U.S.-China trade talks. Evidently, things are going well. Yesterday, they announced that they were extending the talks by a day, and you generally don't do that when you're mad at each other. So I'm assuming that's going to be a relatively good sign.
I got to think it is a good sign, Dave. That they're going to continue one more day. And the other thing to remember is these are kind of mid-level type of talks. So it's going to be interesting to see how that comes back to each of the countries, and then what they decide to do with it.
And that's going to be the big thing that hits. I mean, there's no political damage to cutting off the mid-level talks, relatively speaking, on domestic politics. So kind of adds a little bit more, at the very least, to the fire that maybe we're actually getting along and making some progress, because the mid-level talks really, nobody with any fancy rank is involved in these things. But the combination of President Xi and President Trump, when they get to that point, that'll be when we find out whether the rubber's meeting the road there.
Yeah, it will. As we look at other things that are coming out today, there's not a lot on our economic calendar today, but there is at least one thing I know that's coming out that could weigh on the markets today, and that's going to be the Fed minutes come out.
The last meeting of the Federal Reserve. You and I were talking about it before we went on the air. A whole pile of the stuff has already been leaked out as far as the Federal Reserve decisions, but I can't help but believe that a lot of really picky investors are going to be looking to see just how much discussion there was about what happens if the economy goes south. What are we going to do, and how conservative are we going to be as far as our interest rate decisions?
Well, and that's true. It's going to put it in black and white. I mean, so far we've just kind of heard what's leaked out of there, and black and white, it'll give the analysts and the traders a little bit more time to really digest what they're saying. One of the talking heads I was listening to this morning, was saying that, when you look at the Fed's balance sheet, they really haven't trimmed that much off the balance sheet. At least is not as much as you would expect them to have done so far.
We kind of had the impression a while ago that they were planning on basically getting out of the mortgage business and selling off all those bonds, but they haven't really done it as fast as we thought they were, have they?
No, they really haven't. They've raised interest rates, but they haven't really shrunk their balance sheet as much as people thought they would.
Which actually, from the standpoint of those of us that are hoping they keep an eye on the markets, if we did both a big shedding of bonds and then turned around and raised interest rates, that'd kind of have a double whammy on the market. So right now we're going up in kind of a conservative, planned fashion, which actually feels good. I give Powell some credit for that.
Well, that's true. He's had to hold back on something, and that was kind of the area that he did, even though it really wasn't seen by us out here in the public and the investment public. The other thing we've got coming out today, and I think this could play a little bit on the oil stocks and the oil inventory, and that's the crude oil inventory comes out today, and I think that's going to have some effect on oil prices, which we've seen them steadily increase now this last week or so since the first of the year.
Now, yeah, we're up over $51 when we get down to the numbers. So if we've got a glut of oil, we'll end up seeing that at the very least level off, I'd assume.
I think so. We would, if inventories come out where they think they are, I would think that we would see some leveling off of that. And then, you and I talk a lot about home buyers and home sellers and construction industry. Well, this is the start of earnings season, and so we've got the first home builder coming out this morning, and that's Lennar Homes. And Lennar came out with a pretty good quarter. I mean, they beat across the board when it came to everything this morning. They were expected to come in at about $1.91. They came in at $1.96 a share, and they closed out their year. So They were good there. They had a really a pretty good year. I mean, I think they come out at like a 1.7 billion, and that was not quite double what their revenue was in the prior year.
That's enough to impress a congressman, even when you start putting billions in front of the dollar amounts, isn't it?
Yeah, it really is. So it's we'll see how that plays out because KB Homes comes out today after the market closes, and then we got a couple other builders that will be coming out in the next few weeks.
Kind of interesting starting out earnings season with probably the single most important category, with two of the big ones reporting on the first day of earnings season, reporting in earnest. That's convenient at the very least to get an early lead on the market.
Yeah, it is. So, because let's face it, that's one of the things that we really judge our economy by is how well construction's doing and how well new home sales are selling and that type of thing. And we've been talking lately about how the construction industry has really kind of slowed down because of the rise in interest rates. Well, from what I saw today, a little blurb was that we've seen a little pickup in mortgages because interest rates have dropped down a little bit.
And on top of, I've also been saying for some time, and we really haven't disagreed on this notion that really it's an acclimation front. Once you get used to the notion of mortgages being at a certain rate, then the market will kind of open back up. But the shock value while they're raising them is the real deleterious effect on home buying. You and I both know from being a little above the age of the first-time home buyer, interest rates have been an awful lot higher in the past than they are right now, and folks swallowed hard and took the mortgage. But boy, when they're going up, that really slows things down. It's stability that counts for a lot.
Well, it is, Dave. But the other thing that I think it does is as interest rates go up and then they level back off kind of, then home prices adjust also to take into account a lot of times what that rise in interest rates has done to the real estate market.
Chatting with a real estate agent friend of mine a couple of days ago, she was saying that she'd noticed that the asking prices on homes in the middle of the range, they aren't falling, but they've leveled off and declined by a little bit, even around here, as in mortgage rates have gone up. The asking prices have gone down, so the increase in mortgage rates has kind of slowed the property value increase as well, which in a boom and bust market isn't all bad.
You're right. It's not, and so that does give us some positive numbers, I think, as we look forward. And I think it's going to be important today what the Fed says and the rest of the home construction industry. What does it look like for earnings season, and what's their outlook going to be going forward?
Yeah, absolutely. I see that KB Home report either as a confirmation or a throwing doubt on Lennar being kind of interesting when the market closes. I also suspect that tomorrow Chairman Paulson is going to be on the rubber chicken circuit. He's got a speech, so if the Fed minutes at 2 p.m. say something mildly disturbing, all of a sudden the words out of his mouth could get real intriguing tomorrow morning when he takes the podium in New York.
Well, and that's true. Hey, I forgot to mention what the stock's doing for Lennar. They're up about 1.2% this morning before the market opens up.
I didn't know whether they had that or not. They weren't on my big gainer or loser list, so I considered that good news because a real spike either direction sometimes can be scary.
Yeah, that's true. The other thing we've got, tonight after the market closes, we're going to get our first taste of retail. Bed Bath & Beyond is going to report this afternoon after the market closes, and so that's going to be kind of our first little step into retail.
Good canary in the coal mine because they qualify under the discretionary retail category, and it gives us a good reading. I mean, if they're spending money in discretionary businesses, that kind of is a harbinger of good news for the base businesses in retail as well. Everybody except, of course, Sears. I suppose we got a note to everybody that everything got extended by 1 day to give their chairman an opportunity to revise his offers. So, no, we don't have any news of Sears going toes up yet.
Well, yet may be the key word there, Dave. It's going to be interesting to see how long it takes for that to finally get finalized and out of there. But it's got to do one thing or the other, right? Either he's got to sweeten his bid and buy it out, or it's going to go to auction. And either way, I mean, obviously we would rather it get bought out because that's going to save a lot of jobs. If it goes to liquidation, then I think that's going to be that 50 to 60,000 jobs going to go out the door.
That kind of make President Trump's low unemployment rate go out the window for at least a month or two, won't it?
Yeah, I think it probably will.
Yeah, that kind of a movement, that's enough to actually move the needle as far as the unemployment rate. And the fact of the matter is, even the bankruptcy court doesn't want to push this thing heavily in the direction of liquidation because, I mean, closing Sears is kind of like sinking an aircraft carrier. This is one big butt business that it would be awful doggone hard to liquidate on top of the impact it has on the unemployment front in the country.
Well, and just the historic value. I know when you start talking about legal proceedings, stuff like that, historic stuff doesn't really take into account. But still, from us out here, the consumer standpoint, you know, growing up with the Sears catalog, yeah, it'll just be sad.
Absolutely. Plus, there's a domino effect to be had. Not only are we looking at 50,000 jobs at stake, but you take 400 and what do they got left? 490, 500 Sears stores and the Kmart's they got left. Think of what that does, dumping all of that onto the commercial real estate market. If you want to see your real estate go up in value, you don't want to see 1,000 stores with that kind of square footage suddenly following on the market because suddenly commercial real estate prices are going to hit the commode in a heartbeat when that happens.
Yeah, you're right. That will affect the real estate. It'll affect those community stores and the communities that are in because it's going to put people out of work in those communities. So some big decisions coming there.
Well, we are just merry sunshine when we talk about Sears. We'll cross our fingers that works. So we're looking at 45 minutes before the market opens up this morning, Phillip. I'm looking on my delayed quotes at some green ink, which doesn't feel at all bad at all this morning. After a 255-point jump in the Dow yesterday, all three indexes, with the exception of the S&P, were up over 1%. The S&P at 9,700s. I'd call that all in a darn good day. Can we keep it going this morning?
Well, Dave, that's a good point. It was a good day yesterday, and today it looks like we're going to follow through. At least at the open, the Dow's up about 130 points, which is a little over 0.5%. The S&P 500 is up 11 3/4, just a little shy of 0.5%, and the Nasdaq's up about 34 1/4, which is a little right at 0.5%. Gold's trading. You might as well call it flat. It's down 50 cents. And same thing for silver. It's up about 1 cent. The big deal today is crude oil. Crude oil's up 2.8% from where it closed yesterday. Right now it's at $51.19 a barrel.
Crude oil's starting to look like Bitcoin. It's so doggone volatile, isn't it?
Yeah, it is. It is. We haven't talked about that. We may have to find some information on Bitcoin and talk about it this week.
I've been reading about it's actually firming up a little on price, but it's falling in terms of market share. We'll get to that. We have a slow day during earnings season. World markets overseas, by and large, everything is on green ink sides today, primarily off of the fact that there's some optimism on the trade talks. Interesting side note, I've been watching the 10-year Treasury note interest rate. Its yield is up again this morning by a little bit, indicating we're finally seeing some of the smart money going back into equities again, which is an optimistic sign as well. Phillip, somebody want to turn this volatility into a stable retirement. How would I make an appointment with you on the phone?
Dave, they can give us a call at 863-382-0037. Follow us on our website at statlerfinancial.com. And then join us every weekend for the Statler Financial Radio Show. It's at noon on Saturdays, 10 a.m. Sunday mornings on your sister station, AM 730.
All righty. And I do appreciate it, sir. We'll catch you in the morning. Enjoy the day, sir.
Thanks, man. Talk to you tomorrow.
Appreciate it. It's 105.7 Light FM and Statler Financial Services, Phillip Statler. Stop.